Okay, this is in-class problem number 1. You happen to have that in your handout. And it's talking about classification of accounts. We happen to have 5 categories of accounts. We have assets, we have liabilities, we have equity, we have revenues and expenses. And I happen to have A through I here, the first question, and we need to be able to categorize these items as either an asset, as a liability, as a owner's equity, or an equity account, as a revenue or an expense. And the first one happens to be the inventory of boating supplies owned by the company. And the company happens to be a marine supply company. So this is the inventory. Well, that's a resource. And because it's a resource, it's an asset of the company. And I want you to know there's a difference between inventory and supplies. Inventory is what you sell to others. Supplies are what you consume internally. So in A, our answer would be inventory is an asset. In item B, it says monthly rental charges paid for store space. Well, monthly rental charges, that's an outflow, and we incur that outflow to generate revenues. So that outflow is an expense because we incur expenses to generate revenues. And we have store space that we rent so that we will have people come into our place and buy things. So item B is an expense of the business. Item C says a loan owed to Citizens Bank. Well, anytime you owe somebody something, that's a debt of the company. And that is what we refer to as a liability. So C is a liability. Item D, the new computer equipment purchased to handle daily record keeping of the business. Well, that's a resource. It's an asset of the business. Now, the thing about this asset is we're going to find out as time goes on, we will put it on our books as an asset, but over time we will depreciate that. And in Chapter 10, we actually find that we have 3 different depreciation methods that we could use. So item D, the computer, that is an asset. Item E, daily sales made to customers for cash. Now, we're not talking about the cash, because obviously cash is an asset. But we're saying, when we make a sale, what is that sale called? Well, that sale is called revenues. That's an inflow of the business. And it really doesn't matter whether it's cash or on account. Because, as we will find in Chapter 3, we are going to use the accrual method of accounting. There are 2 methods of accounting, the accrual method and the cash method. The accrual method is you recognize revenues when you earn it. And so it really didn't matter whether the customer paid us cash or not, because when we made the sale, we'd earned it. That's revenue. Item F, daily sales made to customers on account. Well, again, we're not looking at the account, we're looking at what the daily sale happens to be. And the daily sale, even though we didn't receive it, under the accrual method of accounting, happens to be revenue. The next one, item G, land owned by the company to be used as a future store site. Well, that land is an asset. Now, because it's not presently used in the business, it's an investment or an other asset. H, weekly salaries paid to the employees or paid to salespeople. Well, salaries, why do we pay salaries? We pay salaries to people so they'll sell things and generate revenues. Therefore, that's an expense. So hopefully what you're starting to see now is we incur expenses to generate revenues. The expense is an outflow, and we expect to have that outflow to generate inflows. And revenues and expenses appear on the income statement. The last item here, amounts owed from customers. Now, this is an amount that a customer owes us. If you recall, if we go back up into F above, that was daily sales made to customers on credit. And we said that was a revenue, and that's correct. There is a revenue. But what is this thing that this person owes us? Well, the thing that they owe us is we call an account receivable, and we will talk about that more in Chapter 2. But what I need you to know is that an account receivable, when you see the term accounts receivable, That account receivable is an asset. Students often get confused. They want to say an account receivable is a revenue. That's incorrect. The account receivable came from a revenue activity, but the account receivable is not a revenue. Let me ask you this. If a sale had been for cash, is the cash a revenue? No, the cash is an asset. Therefore, from the revenue on account, you received an account receivable. The account receivable is not a revenue. The account receivable is an asset. All right, so that's the first problem.